Welcome to Trading Lounge and the European indices for the 4th of February, and starting with the DAX here on the daily chart. I've got this very simplistic and in line with the US markets as well. It may not be the case that we've got wave 4 here, but what interests me the most is counting the 5-wave sequence to the next termination point here. And once we've got those 5 waves, if we breach that, then we can expand the wave count. Okay, but from the last few days, we've been counting the 5 waves up into this space. So let's just continue with that today. On the 4-hour chart, we're looking at it like this with 1 and 2 in here. And then we'll be working wave 3 and 4, 5. But I think I'll just go to the hourly chart to count that in a little bit better. I need to adjust that from Thursday here. Let me just clean this up here. Everything's going pretty much according to plan, and we're looking for wave 3, wave 4 here. That can pull back to the wave 4 of 1 lesser degree in here somewhere, so just need to be a bit mindful of that sort of thing. And then we'll see wave 5 to the upside. As I mentioned, once we've finished 5 waves in this section here as well, then we'll just observe it, because in a nutshell, we may be going up much further, which wouldn't surprise me. So we may end up seeing this as wave 1 up there and wave 2 pulling back in across the 14,000 and then moving up higher at that point. So yeah, we'll just stay with what we know and tracking this up through here. So we'll just check that on the 15-minute chart. I think we were working on it, or was it the tick chart? No, this will do the trick. So so yes, we've got wave 1 and 2 in here, then 1 and 2 here, and then 1 and 2 here, and then 1 and 2 and 3 and 4, and a bit of a stretch for 5 really. I mean, I really need to include all that there for that. I'll just note that, and I'll come back to that point. I need to check that on the tick chart. I'll just double check that. Okay, so but anyway, wave 3, 4 and 5. So we're going pretty much according to plan. So we should push up above here and then have a movement across here. So really this is a classic trading levels pattern here, where we have the arrival, the reaction in 3 waves, and then 5 waves above that, and then a larger ABC pattern here, and then pushing up from there. So at the 14,000 we can expect that correctional pattern across there before moving higher. So that's sort of where we are, all pretty sort of simple at this stage. Let's have a look at the FTSE. That's a little lazier, so to speak. We're looking at well, I need to move this, don't worry about that too much. But here we were looking at this being down as either an A and a B and a C wave, or down for 1 and 2 and 3 here, and going back for 4 and then going down for 5 here. But yesterday we viewed this as an impulse wave moving to the upside here. So we can go long on the closest largest number, in this case a medium level, 6,500. So all we need to do is really just leave the stop out of the way now that we're triggered at that point. So we'll do that. We just need to leave that out of the way until, if you're not long in this already, then I'll just copy that line there and put that on that high there. We'll probably end up with more of a correction here before heading higher there as well. Let me just check. So this is the tick chart here. It looks like we've got 1, 2, 3, 4, 5. So we could probably get wave 1 and 2 to here somewhere. This is all a little bit rough and ready, but I'm just assuming 1 and 2 and 3 and 4 and 5 here. So I think we can go kind of here. I think we've actually got up for wave 1 here. So that means that we can pull back deeper in this space. So we just need to be a bit careful about that. We can pull back into... Probably not the case, but the other point we need to look at here, if I can just grab that, is bringing that up into that space. It's upside down, but the 38.2 will be the 61.8% upside down, so we can just use that there. Let's just take a closer look at this here. So it does look like we can use this here as the A wave, the B wave, and the C wave to here. So we may be done, but I don't have 5 waves up here either. I have 1 and 2 here, and then 1, probably 1 and 2 in here, then 1 and 2 and 3 and 4 here. So that's 1, 2, 3, 4, 5 here. So I'd probably still see that. So that can still be the wave C there. Oops, the daisy. Okay. So yeah, look, at this stage, we can see this is an A and a B and a C wave to here. So we would need to see it come back and then make another high up here. Another way to view this though is the 650 here is the lower end of group, is the midpoint, sorry. So we've got 1, 2, 3, 5, and then 8. So yeah, support on this one here, that would be the safe trade, a tested support on that. So you could go long over here on that. Okay, so that would be the safe trade. If you're going to go in long now, well, it still just could be the ABC, so that's where you're at risk. And if you're currently long at the moment, we need to leave the stop out of the way and just have a bit of faith in the trend that's got further to move to the upside. I mean, I'm quite sure this is an A and a B and a C wave, because even if I took it from here as 1, 2, 3, 4, 5, here as 1 and 2, and then down to the third here, this is already pulled up 61.8% rather than 38.2. So that's why I'm going for the ABC on that. So anyway, safe trade 65.50 would be, as support, would be the safe trade. That would flip it to the upside at that stage. Alrighty, I'm going to leave it at that. I'll just go back to my main page here for this. I'll just have a look. Where were we? We're on the 4-hour chart. Yeah, so that can come down to 65.50 area. 65.50, that's quite a bit lower, isn't it? 65. Well, that's okay, just there anyway. We'll know what we mean. We'll just leave the stop out of the way. So there's still risk in all of this, but certainly add to the position above here as well. Okay, we'll leave it at that. I mean, technically we should be taking out the top here, but it's really sluggish, you know, so let's just keep it, be mindful about this as well here. So I mean, you're better off with markets that are leading rather than following. The following ones are kind of safer most of the time, but they don't have the range in them either, so that's why the leading stocks are much better. Alrighty, I'll leave it at that for the time being. Oh, hang on a second. I'll just have a quick look at this. This is the stock 50 here. Don't worry about the count too much here. We can look at this as an A and a B and 1, 2, 3, 4, 5, 1, 3, 4, 5. So we can still continue with that. But what interests me the most here was this one. This is what we'll have to watch, really. This is 1 here and 2 here and 1 and 2 and 3 and 4 and 5. So this is a third wave here, fourth wave, and a fifth wave here. So that will take us up to there and a correction. So we still got further to go up here. I mean, we can just look at that as 1 and 2 here, and then 3 there. So that's the stock 50 for you. Okay, that's pretty rough, but I just wanted to see, you know, would we get a top there? But I think this is all just be wave 1 and 2 here. So there is range for the FTSE and the rest of them to go up higher in this case. Alrighty, thanks for tuning in. Cheers.